Hello everyone, welcome to my presentation. My name is Ageng Putri. I am from Faculty of Economics and Business, University of Indonesia, located in Jakarta, Indonesia. As you can see on the screen, our topic today is analysis impact due to 3.5 GHz frequency spectrum implementation for 5G technology, the business evaluation of satellite operators. My presentation will be divided into 5 parts. I'll start with introduction, then literature review, method, discussion, and then finally the conclusion. I think everyone has heard about 5G technology. 5G is the fifth generation of telecommunication and wireless system. What 5G can offer? 5G can offer data transfer speed up to 1 gigabit, reduce latency, has high connectivity, and can improve spectra and energy efficiency of the future generation networks. I'd like to give you some more background information about satellite and mobile technology in Indonesia. As you know, Indonesia is an archipelagic country. Satellites become a major component in telecommunication because many terrestrial technologies depend on or at least interact with satellite services. While mobile subscribers in Indonesia have dominated the development of ICT since 2015. At the end of 2019, the total number of people using mobile services and internet in Indonesia is around 73.7% of Indonesia's total population. Increased demand of consumers in the mobile technology with high data rate has driven the development of 5G technology. What's the same about these two technologies is both technologies requires the same resource, which is frequency. And this frequency usage leads to problem of implementing 5G. What can be the problem? 5G technology implementation on 3.5 GHz spectrum frequency will cause interferences on satellite services. Satellite operators may no longer use 3.5 GHz spectrum frequency due to interferences. Under government regulation, there is compensation for satellite operator. This study will focus on the impact of the 5G implementation at the 3.5 GHz frequency spectrum on satellite operators and calculate the compensation. Now let's turn to literature review about spectrum frequency usage in Indonesia. Ministry of Communication and Informatics in Indonesia called Kominfo already has a spectrum frequency candidate that will be used for 5G implementation. In the lower band, in 700 MHz. In the middle band is about 2.6 GHz and 3.5 GHz. And in the upper band, on the 26 GHz and 28 GHz. Currently, Kominfo is focusing on the middle band at a frequency of 2.6 GHz and 3.5 GHz. Several countries have developed 5G using the 3.5 GHz frequency, including Australia, Finland, Italy, South Korea, and the United Kingdom. As I said before, that frequency leads to problem of implementing 5G in 3.5 GHz frequency is because based on the Indonesian government regulation, a 3.5 GHz spectrum frequency is given for fixed satellite services called extended C-band. Satellite services using extended C-band frequency are widely used in Indonesia because Indonesia's natural characteristics including high rainfall and humidity. Using this frequency can provide good level of service availability. We can see that in the pie chart that 66% of the transponder capacity has been utilized by customer. Turning to the next detailed review is how do we calculate the valuation for analysis. Valuation in general is a process in which a monetary valuation of a good or service is carried out by considering all aspects. This research will use replacement cost and discounted cash flow or DCF method for valuation. The replacement cost is the amount that must be paid by an entity to replace the asset at its present value. The DCF method is a method of valuing a project, company, or asset using the concept of time value of money. The next step is to calculate compensation using sensitivity analysis. Sensitivity analysis is often called what-if analysis. The step for conducting a sensitivity analysis is first to determine the basis of the model, then specify the different parameters that can be selected to vary in the model, and finally observing changes in value. Let me elaborate further on the method used in this research. This research adopted the qualitative method. This research featured data from the year satellite launch to 2020. The data processing will be done step by step. First, we calculate the business valuation of satellite operator and then called model 1, and then calculate the replacement cost of satellite operator. The replacement cost consists of two types, capex one-time charge and operational expenditure. And then we calculate the business valuation after adding replacement cost called model 2. And finally, we calculate the compensation using sensitivity analysis. This leads me to my next point, which is discussion. To begin the calculation, we need to know all necessary information on sales projection, revenue projection, cost projection, and depreciation per year. The sales projection is presented in megahertz unit. You can see on the table that the sales data from 2017 until 2020 are real data obtained from operator, while data from 2020 to the end of satellite lifetime is a projection. The transponder price refers to the market price. It presented per megahertz per month in 1000 USD. Based on data from Northern Sky Research, there will be a price erosion on the price of transponders, extended C-band and C-band by an average 2.3%, and for the Ku-band transponder there will be a decline by an average of 4.3%. After knowing the sales projection and price of each transponder, we can calculate the revenue. Revenue projection is presented in 1000 USD. Next, we turn our attention to the cost projection. The main component of satellite operating costs are for staff and infrastructure. In addition to satellite operating costs, there are components of non-tax fees that telecommunication service provider must pay to government based on Indonesian government regulation. Satellite operator must pay telecommunication service provision right fees of 0.5% of the company gross revenue. And then there's telecommunication universal service obligation contribution called USO, which is 1.25% of the company gross revenue, and the station license and the radio station license fee. After obtaining the income and expense calculation, we can calculate the profit and loss projection. This profit and loss projection called model 1. Then let me go back to what I said earlier about the replacement cost. There's two types of replacement cost, which is one type capex fee and operational expenditure. The one-time capex fee we can see in the table in 1000 USD. This fee is the cost that operator must incur to continue provide services for customer. Customer who use frequency extended C-band must replace the LNA or low noise amplifier and the filter, and also need to repoint the antennas. And for the customer using C-band frequency, they need only to replace the low noise amplifier and the filter. Then we add the replacement cost into the new cost projection called Model 2 cost projection. As we can see on the table, the Model 2 cost projection has a new component which is CAPEX one-time charge and the transponder lease cost as the operational expenditure. After we get the cost projection, Model 2 cost projection, we can calculate the Model 2 profit and loss projection and then compare the result with the Model 1 profit and loss projection. As we can see in the table, there's a decline in the EBITDA margin and net income margin. The average decline in EBITDA margin is 44.9% per year, and the average decline in net income margin is 35.9% per year. Operators need to get additional revenue to maintain a minimum net income margin of the same as Model 1 to avoid losses. This additional revenue called compensation. The compensation is calculated every year using sensitivity analysis. To give you an example, we have the sensitivity analysis for compensation in 2020 and 2024. Then we continue doing it every year until the end of satellite lifetime. Compensation become the additional component on the Model 2 revenue projection in 1000 USD. Then again, we can calculate the profit and loss projection after adding the compensation to see the effect on the net income margin. It can be seen that the addition of compensation component to revenue can cover the loss of satellite operator due to replacement cost. In the end, we get the same percentage of net income margin for both model, for Model 1 and Model 2. Since the compensation is calculated every year, we need to use present value to calculate the total compensation that will be given to the operator in the first year of the 5G implementation, which is in 2023. And after we calculate using the present value with weighted average cost of capital satellite industry 10.57%, we get the minimum compensation to satellite operator is 169.17 million USD. In conclusion, the 5G implementation on 3.5 GHz frequency causes a decrease in business performance for satellite operator, with an average decline in the EBITDA margin of 44.9% per year and in net income margin of 35.9% per year. The minimum compensation for satellite operator in order to maintain their business is 169.17 million USD. Another significant point is compensation calculation in this study are carried out by considering the technical cost factor only and can be differ for each satellite based on its remaining satellite lifetime and number of customers. That brings me to the end of my presentation. Thank you all for listening.